Welcome to TradingView with Matt Brown, who's an independent market strategist. How are you today, Matt?
Very well, thank you.
Okay, well, one of the purposes of TradingView is to, well, not only make a call of the market, but look at other people's homework. First, we're starting off here with dollar yen, and Osama is the person making the call here. It looks like we're in a bearish channel, and we're about to turn back down. Is that something you can see or agree with?
Well, I mean, we can clearly see from the trend it is a downward channel. Looking at potential breakouts there at beyond 114.5, 115. Yeah, we could see this dollar yen weakening.
But do you think? I mean, it's one of those things that the line's there, but is that there's no real confirmation of failure at this stage. I mean, it's just literally. I mean, you probably want a bit more, would you?
I would. I mean, we're seeing lower lows, lower highs. But obviously, with everything going on in the US at the moment, this could be a breakout. We could expect a lot of volatility. So potentially to the downside. But look, dollar at the moment, it's going to be volatile over the weeks to come. So we could see a breakout to the upside.
So maybe not go for that one in a wholehearted way.
Not fully. I wouldn't go all in. Maybe a small short, but obviously bear in mind where your stop levels are with the dollar movements at the moment.
I mean, I mean, in those situations where it's not a conviction situation, you probably just want to see, you get as close to the top of the range as possible. So if it was 115.40 or 30, then have a tight stop above that level rather than risking too much. I mean, we're obviously half a yen below that at the moment. But let's go on to the next market. WTI crude from VPIP.
Yep.
And false breakout. And can you see that type of trade on there?
There's a lot going on here. Look, we could see WTI increase and push to the upside. Putting a short on, I mean, we've had a good run up. I'd be wary of more upside movement here. I'd actually probably be looking to be long oil with the current situation.
So a difficult one again. So I mean, these are sort of like half of neither here nor there really.
Yeah, I mean that's the thing. There's three options. You can go long, short, or do nothing. And I mean, I'd be swayed towards being more bullish on WTI is my personal view. But looking at potential downside, false breakout, I don't think so.
Okay, well, two non-situations there for us. The next one. Right, this looks a little bit more juicy. The Kiwi versus the US dollar from Pardis. Beautiful sort of turnaround there. The saucer pattern there over the last the near term there on this chart, which is it's the daily chart or not. But what's your call at the moment?
I like this chart. I do see more upside with the Kiwi dollar. Looking at commodity prices, looking again as well, bearing in mind the dollar is key. The dollar is going to be the driving force around a lot of these currency pairs. But the Kiwi does have a bit more upside, I think, and I like that chart.
So this is, I mean, I suppose it's veering on being a cup and handle formation, that turnaround on the daily chart over the recent past. You've also had, you've had the different stages. You've had the trend line break, and then the two flags, let's say, and then now we're up at resistance. Would you wait for the break, or would you go in earlier?
I think earlier. I mean, well, we've seen two higher lows. We might see a little bit of a pullback. That could be a buying opportunity. Looking for an increase more to the upside. So that would be a long position.
Okay, great.
I do agree with that.
Full marks to Pardis on that. And then euro dollar buy on dips. I mean, the turnaround here has been quite sharp, hasn't it?
Yeah. Again, at the end of the year, there was a lot of talk of, are we going to parity? Could we, see parity? It's been range bound. Again, we're going to see a lot of volatility. This is, again, with dollar yen, this is going to be a currency pair that's going to attract a lot of volatility over the coming weeks. Looking at the ranges, we're at the top end of the range. If we do see a breakdown to 106.50, that could be a buying opportunity. So again, it's it's being nimble on your feet, getting in and out, and I think buying on the dips, fair enough, buy on the dip, but also set a take profit, possibly half a point away. It is an interesting chart, and certainly we're going to see a lot of volatility, as I've already intimated, over the next couple of weeks, certainly in this currency pair.
We've got a half trade for FxWirePro, but we'll obviously no doubt see how this market moves. That's the hourly chart there. I probably prefer the going early risking around the 105.80 area because I'm a bit mean on my risk reward there, but. Obviously, we'll see what happens in the run-up to, well, in the first few days of the Trump administration. But on that note,
Indeed.
Matt Brown, Independent Market Strategist, thank you for helping us with TradingView.
You're welcome.